Hello, YouTube and StockTwits. This is Bagger Don, StockMarketCaddy.com, and you're looking at our scorecard. Yes, it's important to keep score when you're golfing, and it's important to keep score when you're trading. This is what Bagger's trades looked like today, and pretty simple. First thing is when we're trading futures, we start on Sunday night, so we didn't have any trades last night at all, and we won't trade during the week. We won't trade more than usually about 5 markets. So this is the NQ, this is the Nasdaq, this was gold, and then this would be our third, fourth, fifth. This would be about a 6 market. We leave this open during the week, though. We'll settle on the the 6 markets. We trade what comes, what presents itself from the swing machine. I was using the strategy was basically the swing machine on both of these, both NASDAQ and gold. We were trading in minutes. We were trading the 1 minute and 5 minute, which doesn't mean that we're trading every minute. Sometimes people think because you're trading a minute that, you're trading every few minutes. That's not the case at all. In fact, for today, Monday, we had on the NQ, we had three trades, and those 3 trades totaled $650. And here it is. And then also we had 2 trades on gold. We tried to take it short, just wasn't giving it to us, and we lost a total of $50. So our net for the day was $600, and we had 5 trades. And that's fine. It was a rather boring day, but boring is good for us. Boring is good. The market was very orderly. We were able to get in. If I had, and I don't have the information right here to share with you, but if I was to critique myself on my trading, where's my cursor here? Try to get the cursor. Where is that little thing? There it is. I can barely see it. There it is. That the 650 I had on the very first trade, I had a high water mark of $1,000, and I stayed with that trade probably a little too long, and I ended up netting 500. The next trade was a losing trade of $50, and then the next one, the last one, was 200. However, there were really 3 optimum trades off the swing machine. One of them being the 1,000, and then there was another one coming back, had a high water mark of almost 500 or 600, and then the last one had a high water mark of 300. So, 3 perfect trades would have paid out 1,500 to 2,000. 3, decent trades paid out the 650, and that's just fine. And 1 small loser. So, in any case, that's it for today. This profit factor, by the way, what we do is at the end of the week, we'll do this with you all. We put the total profit in here, and then we'll go in and add up the total red boxes of losses, and we'll put it in here. And then we divide, or it's done for us, we divide the total profit by the total loss, and that gives us a profit factor. If you've never heard of a profit factor, well, that's not so good, because that's how you make money. If you don't have a positive profit factor, then you're not going to make money. It's more important to have a positive profit factor than to even have a winning percentage. Winning percentage really doesn't tell you anything. It could be 10% or 5% a day. That doesn't tell you anything. A person could actually be losing money. A profit factor, if you're making $2 for every dollar you lose, or 3 or 4 or 5, making $5 to every $1, you become a money-making machine. Your trading becomes a business. You generate cash flow. And that's what we do. I'm Bagger Don at Stock Market Caddy. I will be here this evening. Maybe doing a little trading, maybe doing some programming. We're always working. If you want to chat with me, wherever you be, West Coast, East Coast, Australia, New Brunswick, England, we don't care. The markets are the markets. Feel free to give me a call, 813-758-8263. I'm happy to chat with you. I'm happy to show you, even live during the course of the day, how we go about our trades. If you like this approach to the markets, we're here for you as a mentoring site. We don't want your money. We're not going to trade for you. We're not going to give you trades, although our tools will give you the setups. And these tools are automated and semi-automated and fully automated. Thank goodness for TradeStation. We couldn't do what we do, although we're not in business with TradeStation. We are a customer of TradeStation, and we could not do what we do without TradeStation. They're a fantastic company, fantastic support, fantastic technology, and and we derive nothing from them, and that's just fine. But they're very, very good. And I'm a person, by the way, that for 25 years taught surgeons how to do surgery. The markets are not surgery. We approach it as if it is surgery, and TradeStation's product is much like a surgical tool. It would be something I'd be proud to be presenting to folks. But in any case, we're presenting Stock Market Caddy. Feel free to give me a call anytime, and I hope you're getting it done. If you're not, it's up to you. We can't meet you if you don't make the first call or send us the email. And yes, the markets are going up every day, every day, every day. And then they're going to go down, and then they're going to go up. When you're trading like this, what we're doing intraday, you learn to be agnostic in the market. We trade the opportunities. What a beautiful thing. And I'm in cash all the time. Not just at night, but these trades, we weren't in these trades very long at all. Our time in the market is minuscule. Therefore, our risk is minuscule. Okay, there's a lot to be said for that. So, we're very precise with our trading, and we're happy to to show you how we approach the markets. But it's up to yourselves. You got to make that first move. Now, next year we think the volatility will come back in with a vengeance, or could come back even before the end of the year. But when you learn to trade the way that we're trading, where the S&P is and where it's going, either up or down, is really not relevant. It's relevant if you're trading options, if you're trading position trades, which we will do on occasion. But for the most part, we're trading intraday, and we're trading with such surgical precision. We're using what some people call leveraged asset classes, namely futures. Why not use a leveraged asset class? If I was to trade 100 shares of the QQQs, I would need to use $15,000 and make little to nothing, where I can use a futures contract on the NQ and use a fraction of that amount. The intraday initial margin is somewhere around $1,900. So you can even see when you use that just 3 times, but if you make $500, you're only using, $1,700-$1,800. That's a huge percentage. But we don't use the percentage. It's a distraction. It's the profit factor. And again, if you've never heard of the profit factor and you're subscribing to somebody, or you think you're getting an education from somebody, you might want to think again. Good night, good luck, and we're happy to chat with you. So give me a call. Let's talk about the markets. Let's talk about what we're doing here at Stock Market Caddy. And we've been doing this now for about 10 years. Okay, so this isn't, moving averages, this and that. We're very serious about what we do. Okay? Good luck, everybody.